Yo, what's going on, guys? Welcome back to the channel. In today's video, we're going to be talking about Pulsechain and more specifically looking at the incoming potential golden cross. If you guys enjoy these kind of high frequency deep dives into specific tokens and specific moving averages and so on, make sure to subscribe to the channel. Let's get to 12.2K and check out my web development studio, Cypherus.io. We make sites such as my newest Pulsechain Block Explorer, lightbeam.xyz. So go ahead and check both of those out. Links in the description below. So 10 days ago or so, we made a video on Pulsechain's 200-day moving average, and I was starting to make a video today about revisiting that, but we already revisited it once, and it's playing out more or less, right? So just go ahead and watch those videos if you haven't, kind of catch up, so I don't have to repeat myself too much, and we'll look at things from a slightly different angle today. And to summarize real quickly what the other video is about, it's about the interplay between price and these two moving averages, right? The 150-day and the 200-day. And it looks like we're in a similar situation to both of these with obvious little nuances, but again, a lot of similarities. But today I want to focus a little more on the 50-day interplay between the 200-day and the 50-day on the pulse price. And again, this is Pulse USD, right? Or Pulse DAI, same thing. Now, because we already concluded we were in a similar situation to over here and over here, well, you can see that when looking at it from the lens of the golden cross incoming, which is when green goes above red, we are again in a similar situation as to both of these because they are approaching each other, right? It's making that sort of U shape. We've seen that sort of U shape play out on this green curve once over here, right? Slow down a bit, and then we had our cross over here. Again, once the concavity shifts is the right technical term. Meaning like the curvature changes, direction changes, and all that. So we have our U shapes, and what are we doing now with our 50-day? We have our U shape, right? And it's a lag indicator. Moving averages are a lagging indicator. They just indicate what price has been doing, right? So the 50-day just averages the last 50 days. And some people like to use exponentials instead of just normal. But as you can see, it's very similar. So we'll stick to just simple moving averages, SMAs for this video. So again, we've already had our 3 U shapes complete, check mark. Cool. What happens next, right? Well, we oscillated over here above green and then below green, kind of got rejected, came back down and then ran. Over here, we oscillated after the recovery. We didn't really oscillate around green much. We actually more or less found support, faked out beneath it, and then it was go time. So this time, what do we do? Well, we've gone beneath it once over here, a little bit of fake out, and we're at it again right now, right? But as you can see, green is curving upwards. So if price can sustain, you know, this low, perhaps this is a local low, and we'll talk about that a little further in a bit here. If we can sustain this local low as support, continue going up, then green can curve up as well. Red can catch up, and then we would have a golden cross. Let me add some colors here just to make it a little clearer as to what could happen, right? If price finds support here. Because if price does break down here lower, let's say it does something like that, whatever, it goes lower, then the golden cross could be delayed, right? Something like around here where we were quickly approaching, right? Green is quickly approaching red. They were about to cross, and then price dipped down here, and then green started curving downwards until we finally recovered a bit and we're actually able to get our cross. Right over here was just kind of a clean shot. We approached it and we crossed it. But it's anyone's guess whether we approach it cleanly and just cross it, like over here in late October, or more similar to early November where we get rejected and, you know, green has to come back down a bit until we cross later. So let me get rid of all this slop real quick. The idea is, who knows, right? And I know that's not what you want to hear, but again, I'm not in the business of making predictions. I'm just showing you what these moving averages would do if price action followed different paths. The first time we actually got our golden cross, funnily enough, we were already approaching, if not already, at a local high, right? Price was at about 3 zeros and a 1. And we had some ways to go, right? 50% here, or if you sold up here, you had about a double to go, right? But it was anyone's guess how high this was going to go. So we were already in the middle of our move to the upside, right? We had already gone from 4 zeros and a 5 to 3 zeros and a 1. So we had already doubled by the time the golden cross had hit because the golden cross is a lagging indicator, meaning sometimes it can actually mean the opposite of what the name might suggest. What about the second time we had our golden cross? This was much cleaner because we approached it and we crossed it, as opposed to over here where we had to dip down a bit and then cross it later. It was cleaner in that regard, and it was also cleaner in the regard that it was actually a pretty decent indicator because we weren't in the middle of this move quite yet, right? We had hit about 4 zeros and a 5, come back down to the low 4s, and then we doubled. So by the time the golden cross hits, you know, this one was a week after the move actually started, but it was close, give or take a week. From the bottom over here, you could say it came, you know, 4 days after or 4 days before, because both of these bottoms kind of count, right? They're more or less the same at around the 4.2 level. But regardless, both crosses were bullish in the sense of they're saying we're already bullish and we will continue to be bullish for another, you know, another few weeks. Same as over here. We're already bullish. We're going to continue for another few weeks, about a month over here. And so if we do get a cross, that would be nice because it would indicate the price, first and foremost, is already recovering and that we could still be bullish for a few more weeks. And if that were to happen, we would have to look at our downtrend. Right? And there are many ways to connect this. You could connect it to this high and it'd be much lower. I don't think it makes too much sense to do that, but you could do that, right? Because it actually connects to here kind of nicely. You could do it from that wick over here, but this one obviously didn't fulfill that. So I like to connect it around here because it more or less captures this top, more or less captures this top, right? The average of these peaks, this top, and potentially a next top, right? And we want to break this to see a long-term bullish chart for Pulsechain because in reality, guys, it's just been down, and we definitely want to change that. Right? I mean, just look at that. Many ways to draw this. You could say it's a wedge, but we've had lows that we've broken, right? And we want to see that change if we're bullish on this chart because, you know, again, it's not fun to say this could go down, but you always have to be wary of the realities. Could we see an incoming golden cross soon? Sure. Could it be delayed? Sure. If it were to hit and we were to get our cross, again, that would indicate that price had already been bullish for some time, which clearly it has, right? We're almost double from these lows, roughly double right now. And it would indicate that there are potentially a few more weeks left in the move, just like there were the other 2 times. Again, none of this is a guarantee. It's just, you know, entertaining to speculate and look at patterns that have played out and be more data driven, more or less, because this is one of the less biased approaches. So that's about it. And if we want to look at a few more things, we could look at these lows because these lows are important too. And I remember mentioning them in another video, and I don't like to leave certain threads open like that without resolving them or giving my thoughts on them, giving an update. These lows are important. More or less, they were the range lows until we broke them over here, and you could argue this low is important as well, right? So these 3 lows, about 2.8, 3.1, and 3.3. Those lows are important, guys, in the sense that they were the range lows until we went all the way down here, and in the sense that they protect, if they're to hold, they protect this low right here, right, the 2 5s, because that would maintain this uptrend right here. And you can draw a line through that, right? There are many ways to do it. If you want to connect these 2 points, for example, and those wicks are close enough, green or something, or some moving averages, right? Then you could say we're on that trend line right now on a log scale. Say we're on it, and we definitely need to protect this and make a higher low than that for this uptrend that we've had since, you know, late March, early April to remain intact. We definitely want to hold this white line, right? Ideally higher. Ideally we hold here, right, and continue to go higher. And this is the local low, but obviously anything can happen. You could look at it on a linear scale, and it looks a little more something like that, where it would indicate we have a little more to go, right, to the low 3s. But then again, those low 3s would correspond to this historical level of support at around the 3.1 level. So yeah, I like to look at when certain indicators converge. 50 days kind of converging with it On the log scale, I know it was converging a little better. So it's really anyone's guess, right? But we do have lows to protect and we have highs to break. So right now we obviously want this uptrend to continue. So we want to go above 4.4 if we're to run again, and we want to hold this. I know it's quite the range, but that is more or less it. To finish off, I didn't want to touch on the 100-day because historically around these moves that we were talking about, that we've been kind of focused on for the last few videos, this one, and where we are now, historically, yellow has been more or less the low. Over here, it was at around 5.1, and the lows were at around 4.6. Close enough for me. Close enough for many people. So you could more or less say that yellow was the low 3 times, right? You could count this too if you want. Sure, why not? Over here, more or less we hit yellow once, twice, 3 times before our run. And it's nice that we're making these kind of videos. We're gearing up for a run. I would hate to be in a situation where we were closer to a bearish scenario because those videos are not that fun to make. Over here, you could argue that you always get this sort of initial support, and you could argue that we're here now, right? All of them have this sort of initial little bounce right here, and right here. Right when it's breaking yellow, bounce, and then it hits it later. This time it was 3 times later, this time it was 2 times later, and now we're arguably on our first time in this sort of mini sub-cycle thing that we have going on here. So in the short term, this sort of moving average, however it curves, is just sort of a projection. We would want to see that more or less hold support. Maybe a few wicks beneath it would be okay. Like we saw back in late 2023, early 2024, where we wicked beneath it by 10% or so each time, which would be 2.8 or so. Where's 2.8? Right here. So something like that wouldn't be surprising to see, and it would still maintain our bullish uptrend right here that we have going on. It would respect these really important lows that we've had in the past, and it would match what we did in these sections, right, where we found support around yellow for a little bit. So these are the sorts of scenarios where people get a little disheartened, disillusioned, kind of lose hope, because they're like, oh, I thought this was the run, but here we go, back down again. And the reality is crypto is very, very volatile. Something that goes up 3, 4, 5, 6x can definitely go down 90%. So you have to weigh that when you're making these decisions. Yeah, this is the area where a lot of people can get disheartened because price is kind of just not doing anything. And not only that, it's not doing anything really, and going sideways at lows, at buying opportunities. So, but those in retrospect can turn out to be great accumulation zones. So that's sort of my take, right? I know we talked about a lot. We talked about the golden cross, and it kind of went off on a lot of other analyses, but all of it is important, right? It's all important to look at. It's kind of hard to talk about one thing without talking about other things, but as you can tell, it's getting late here and I'm having trouble speaking. So I'm going to end the video here. Remember to check out cypress.io, the sale we have there for your dashboards, personal pages, business pages, entire block explorers like lightbeam.xyz, which I just launched about a month ago, right? Making good progress on that. So yeah, just check it out. We can build anything, leave an inquiry, or just message me on X. All the links are going to be in the description below. Again, thank you for watching. Let's get to 12.2K. Good luck, Pulsechain, right? I'd love to continue making bullish videos like this. But yeah, all those links in the description. Thank you guys again for watching. I'll catch you in the next video. Peace.